Hello everyone, this is the pre-market report video for 19th December 2022 in terms of Nifty and Bank Nifty. In this video, first I like to discuss quickly about what happened on US and EU market on Friday. Then I'll try to discuss more about the India related stuff. First, regarding the global market, on Friday there are three macros that released further hurts the global momentum and its sentiment. First, Europe's consumer inflation. At present, most of us know that US consumer inflation is dropping very fast, which is positive, but that is not happening still in Europe. Eurostat, the statistical office in Europe, released their November month consumer inflation number on Friday. Officially it is called as CPI data. The data comes as 10.1% against expectation of 10%, which is negative since it's higher than that of the expectation. But on the positive side, it was down by 0.5% compared to that of the October month increase. Then the second is UK retail sales data. On month-on-month basis, the expectation for UK retail sales data was to expand by 0.3%, but on the contrary, it contracted by 0.4% in November against the expansion of 0.9% on October. This all made the four European major index to close 0.7 to 1.3% negative. Then coming to US market, it was already in the negative momentum due to the fear of recession. This Europe's inflation problem adds the additional worry since almost over 25% of US import and export is with Europe. Again, additionally, S&P Global released the PMI data for US for November month. Various institutes released the various PMI data on Friday. I took the S&P Global Composite one for explaining purpose. Other PMI data was also similar to this, so I believe there is no need to look at individually. Anyway, coming to the data, the composite PMI data comes as 44.6 against expectation of 47. We all know anything below 50 means it's the contraction. So 47 number itself it's the contraction, whereas the data comes as 44.6, which means it's contracted more than the expected. The data was a composite PMI, not an individual sector one, which also indicates the contraction was across all the sectors. Basically, it increased the recession fear further, and the FOMC member made the new hawkish comment about keeping the interest rate for the longer period. Extending it over to 2024, and this doesn't help either. It kind of made all three major index and the oil price to drop further negative. Dow Jones dropped by 0.85%, S&P 500 dropped by 1.11%, and Nasdaq was down by 0.97%. In case of oil, both dropped nearly 2.5%. Brent crude oil was closed near at $79 per barrel, and WTI crude oil closed near at $74.5 per barrel. There is no much change in dollar index or in the 10-year treasury bond yield compared to that of the Thursday closing. Regarding SX Nifty, on Saturday morning it closed at 18,316. Along with the Nifty futures, it's kind of indicating 15 to 20 points gap down. Coming to Indian areas in US market, banks closed positive, whereas IT stocks closed really negative. So that's all about what happened on Friday and Saturday on global market. Now coming to India related stuffs. On Friday at 5:30 p.m. Indian Standard Time, RBI released the bi-weekly banks loan and deposit growth. First, deposit growth. It increased nearly 10%, exactly 9.9% compared to previous bi-weekly growth rate, which was 9.6%. It was in line with the expectation and the bi-weekly average range, so there is no drama here. But the credit growth, which increased by over 17.5%, which is really very good for the Indian banking stocks, since more the credit, more the interest income. If required, please pause. This is the bar graph for the Indian bank's credit growth for the last 5 years. We can see in the October and November 2022, it's kind of increasing constantly around 17%, which is very good growth. There is no sign of slowing. Last time this level of consistent growth was happened at during 2010 to 2011 period, where India's GDP grown at over 10%. These two are really positive for the whole Indian economy. Particularly, it's positive for the banking stocks. This positivity in loan growth kind of reflected on Indian areas on Friday. Then another positive news is about the forex reserve. In the middle of October, it hit the bottom of $524 billion US dollars. But last week, forex reserve again increased another $3 billion US dollars compared to its previous week and reached $564 billion US dollars. It's also kind of positive since RBI can able to increase the forex reserve without devaluing the rupee much. Then about other sectors, there are a lot of pending government decisions which can potentially have large influence on those stock prices. So it's better to watch out for any policy announcement. For example, Textile Association is requesting the government to remove the cotton import duty. So if government removed means then it will be positive for those sector stocks. Then there is a draft tax bill for tea, coffee and tobacco. If it's passed means again this can hurt those stocks. But there was a positive government implementation. On Friday during our market hours, government reduced the windfall tax on exporting diesel and aviation fuel. This is positive for Reliance, and also Reliance launched their own new FMCG brand in Gujarat on Friday, another new business in Reliance portfolio. As a summary, clearly the global momentum is really very negative, whereas India-related news is overwhelmingly positive. As I explained, Indian banks positive, Reliance positive. Auto sector is positive since during the weekend, government explained SUV definition, which will be very positive for the local listed manufacturers. Regarding steel sector, it's too positive. JSPL to invest nearly 8,000 crore rupees under government's PLI scheme. And there was a positive news about Tata Steel as they will be changing their steel plant into eco-friendly one, which will draw more eco-friendly ESG group funds into the stock. Sugar stocks always positive because of its export. Now additionally, government is planning to increase the ethanol content to 20% in all petrols that are selling in India. For the moment, only IT stocks looks negative. Now coming to technical, Nifty clearly forms a bearish Heiken-Ashi pattern candle with a high volume on the daily chart. Bank Nifty forms bearish initiation of Heiken-Ashi pattern. HA candle with upper shadow or wick suggests that downward trend is losing momentum, so kind of indicating possible reversal. But the possible reversal can be confirmed only we can say if it crosses 18,400 mark. Then about the summary of moving averages and technical indicators. For Nifty, it is same as Friday morning. Neutral in case of moving averages as 5, 10, 15-day moving averages are indicating sell signal, whereas 50, 100 and 200-day moving averages are indicating buy signal. So in summary, it's neutral. About technical indicators, most of them turns to sell now, so it's a sell signal. Even RSI value for Nifty dropped to 44.5, so it's a sell signal. For Bank Nifty, it's slightly better. However, as a summary, it's too dropped from strong buy to just buy now. In case of RSI, the value is 56, so it's still marginal buy. From option change in open interest, there was a huge number of new call options added at above 18,300 and the maximum nearby new call options added at 18,400 and followed by 18,300. So 18,400 is the immediate resistance. Then from options open interest data, 18,300, 18,100 and 18,000 got the maximum put options, but 18,300 also got the significant call options as well. And because of that, 18,100 is the immediate support and 18,000 is the strong support. Then coming to Bank Nifty, based on change in open interest, the maximum new call options were added at the same place, 43,500. So 43,500 is the immediate hurdle or resistance. Then based on open interest data, the nearby maximum put option is present at 43,000 and 42,500. Since 42,000 got small call options as well, thus it's an immediate support to look out, and 44,000 is the strong resistance for this expiry. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers educational purpose only. Thanks for watching.